All right, so let's move on from there and wrap it up with oil, because this is something, we 2 months ago we put out our Catching the Next Wave newsletter. We highlighted the energy sector, and I purposely did it right around that time frame because I felt that short term there could be some softness in oil and in energy names that I would want to buy into, because while I felt like for the first quarter of this year, oil prices could be soft based on the charts. And we talked about this last time that we felt oil was consolidating off of the first kind of bear market or bull market rally that it's creating, and we're expecting another rally of similar size. And so this is just that kind of consolidation period where a market that grows can correct by time or price, and this one's doing it really with time and price. So that those two green lines are really, really key. It's a big support zone. That's the problem with big support zones is you got to give it patience of like a 10% range, which is not easy to do. And so that we're resting right now in oil. We bounced off of it this past week, that dark green line. So right now, that critical support line for oil looks like it's held. And it looks like, and I think of the next few weeks, the next 5% in oil could be up or down. I don't know what it is, but I still believe the next 50% or 30% is higher, not lower. And our thesis in our Catch the Next Wave was really it's around supply issues. You've got some demand things because China's coming back online, but more so you've got some supply issues. And then also geopolitically, if we have what we talked about in the dollar and in gold and foreign currencies trading oil, I think we start to get really in a situation where the Saudis, it really benefits them to keep pushing prices higher. I also think the Saudis are at an age where they need to make this their last hurrah. Not that they don't have enough money already, but, when you're 50 and you want to, call it quits, the next 10 years you probably push oil as high as you can and make as much money as you can. So,
that being said, that's maybe the Saudis' view, but we have a lot of oil and gas investments in the alt space, and a lot of the oil companies aren't actually in favor of $200, $150 oil because it just creates so much destruction, so much long-term pain that they're fine with $70 to $80 a barrel oil. It's not like they want that to potentially happen on the U.S. side.
No, I don't think anybody really wants it.
Other than the Saudis, to get their last hurrah.
Somebody's going to have to make a decision.
Yeah.
Because we're supposed to be changing overall vehicles in 2035, according to
and that's why I think
the rhetoric.
Now you're getting political.
That's why I feel
changing. Yeah.
That's why I feel that's where you come into supply issues, is because we've had such a big ESG environmental move around this. You've kind of the last 10 years, you've really shut off a lot of supply. You've shut off a lot of drilling. You've shut off a lot of things in anticipation of more solar and wind. And now, we're starting to see that, wow, we didn't really plan this out. When you see that a perfect
Welcome to the government.
Well, yeah, I mean, a perfect example is, I would love to see electric cars really be perfect for the environment, right? But then when I read articles about, oh yeah, you know what? You get in a small fender bender with a Tesla and they end up scrapping it because the expense to repair the battery is so high, the insurance company's like, So now you all of a sudden you have cars with very minor damage that are going off and getting scrapped. And now that's just adding to the environment. That wasn't thought out. Right. And normally you would have had an industry that says, hey, let's make sure it's right for the consumer, including replacement value. Right. That wasn't thought through.
Or take it granular in the fact that all battery cars are twice as heavy as a regular vehicle, causing more wear and tear on the roads and tires and all that type of stuff, which is increasing.
Yeah. So I think all those things, the whole ESG movement has just helped add to the demand in oil, and it's kind of gotten the unintended consequence of a good idea and bad execution. And it'll get better, but in the near term, from an investment perspective, I like the idea of watching oil, and that green line is really, really crucial. If we break below that and say have sustained trade below that, then the whole thesis on oil is completely wrong. I'll have to save face. I don't know what. I'll do something in embarrassment of being
Our next video.
Yeah. So stay tuned.